everybody. Welcome to Thursday morning edition, DMC. Hope you guys are having a great day. We're going to take a look at the markets, the S&P, the NASDAQ, crude oil, gold, from an educator's perspective, identifying breakouts and reversals. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell, get the alerts, the updates. We look at the markets using technical analysis and finding potential turning points. Okay, so let's look at the S&P first, and starting with the daily chart. We had a we had a nice day up yesterday and a reversal candlestick, and we're starting a bit of a move up today on this daily chart. Now, what we see here is actually a pretty good move because we've got a move up and a rest, right? And that move up and a rest is a very typical look for a bull pullback. Now, we've pulled back to about a 23.6 retracement overall in the S&P. If I pull up this Fibonacci retracement, you'll see that it was right around a 23.6 retracement. Got a little bit lower than the 23.6 in the ES. In the actual SPX, which is the index itself, that retracement was actually, put the 23.6 and the 38.2. The 23.6 a little bit beyond there, but it was right at this area of resistance. We poked just a little bit below there. And so if we can continue to move up from this pullback area and we put in a new higher high, that's going to be an extremely bullish sign for the markets overall. And so looking at what we have today, we're up about 23 points overall in the S&P as we've rallied up in the overnights from, really starting with the European market open on Wednesday. So as we've rallied up, we do have our 4-hour chart is still telling us that we are in a downtrend. We've not changed our 4-hour trend. So our small time frame, meaning the 4-hour as the big picture, the hourly as our main entry, is still telling us that we should be sellers. And so there is a pretty good supply area up here I need to be cognizant of that we are approaching. But if we get basing in front of that level, it's going to change it, and it's going to make it more of a confirmation entry. On this move up, as we continue to move a bit higher, you see that we have a speed candle that was formed in the overnights, and we've now come back and retested the origin of that move, and we're basing in front of that area. So I think that right now there's just not a whole lot to do in the S&P in general. There's not a lot of great demand to trade on a pullback. You've got this little area in here, but it's formed at a really horrible time of day, right? 6 p.m., 7 p.m. is just not a great time of day for levels to be formed and for us to really do a whole lot with. So I'm going to hold off a little bit until we get up to this region here, see what the market looks like when we get back up into that area. If you're a much smaller time frame trader and you want to use, say, the 15-minute level, we are coming close to a little demand area here, but we've bounced off of it and aren't really going anywhere, right? So when we see that, we tend to look at this as a potential for a breakdown, actually. And the reason we would look at that as a potential for a breakdown is because when you have a failed area of demand, and that area of demand is a prior area of resistance twice over here on the left, it does set up for a potential breakdown, especially if we get basing in front of that level. So trading on the smallest of time frames, that might be a decent little 15-minute entry. NASDAQ is going to look very similar. We did get a poke above this breakout area. I will say that I wasn't around or awake to see this thing break above, but we've broken above and really have gone nowhere since. So even if you did take the breakout, you're probably sitting there at a break even, and it makes sense to take that trade off. Supply level that exists is up here. It's a pretty good little level. And then the demand, the breakdown level below 823 is still the best level. Now, looking at the daily chart, what we see is that we have put in a lower low on the daily chart. I've not put in a lower high, but I have certainly put in a lower low. And so I just be cognizant of that fact and trade the chart that's in front of you, but just keep that in mind as well. We did not put in that same lower low on the S&P because we stopped at that swing low, but the NASDAQ did put in a slightly lower low. Moving over and taking a look at crude oil. Crude oil has rallied up pretty hard the last few days. I've been making most of my drawings on the V22 on the November contract because I was looking at it from swing trading perspectives. So for those of you that are looking at it from swing trading perspectives, we did have a little bit of a demand area in here, but we were talking about the fact that our 4-hour chart was just chopping sideways for a little bit, and there was really just not a lot of great trading setups at all. Well, now we've created a bit of an uptrend here on our 4-hour chart, and we've hit a little line of resistance there at about 95. So poking above there, you do have, I think, a potential for price to run a bit higher up into this region here. Now, looking at the October contract for smaller time frame trading, for kind of that smaller time frame trading, we hit the supply level here, got a little move away, and then poked above it. There's a couple of 15-minute demand areas down below us. And then the supply level that's up above us has to be a confirmation entry since we've come close to it without getting in, right? We came close to it without getting in, and we're in the context of an upward trend, which makes it a little bit less likely for a potential trade idea. Now, looking at the 15-minute chart, the smaller time frame, see if there's a chance to get in. This is just too wicky. When I've got that many wicks just pointing around, I don't really love levels like that. And then I think this is a bit of a retest of this area over here to the left. So as it stands now, there is, and I deleted this level just because I wanted to make sure that I could see this again. There is a bit of a level on top of a level right here in that area of demand. And when you have a level on top of a level this close to each other, I make the first level that will be hit a confirmation and the second level a limit entry. And then gold is rallying back up just a bit. We're coming close to our supply area up here. Problem is we're basing in front of the level, which makes it the KOD, proverbial kiss of death. I will say that there's a little bit of a zone down here that exists that makes this a little bit more interesting. Formed right around midnight, my time, Central, which is a pretty good time I've noticed for gold specifically. And so a pullback into this region here, I think, is actually a pretty good entry at 1771 by 1767. So overall, bigger picture on gold. We've come down from this 2078 all the way down to 1678. Where the next stop is, we've got to get above this swing high for price to continue to run any higher. Taking a look real quick at the euro, because the euro also came back down. Not overly surprised that we bounced at right at parity. We came a little bit below it and are starting to get a little bit of a bounce out of it. Now, I was looking at that area as a potential bounce to get us into supply for an opportunity to get short. I was not looking at that bounce as a place for me to get long, but there's two nice areas of supply up above me for us to keep an eye on in the euro, right at around 1.01. You've got two areas of supply on the hourly chart that both can make for pretty decent entries. All right, well, that's all I have for today, everybody. I hope you found something enlightening and insightful. If you've got a question, shoot me an email, support@tradersarmy.com. Until tomorrow, buddy, I'll talk to you soon. See ya.
Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to TradersArmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.